All right, NASDAQ 2024, May 28th. We're going to go over the successful trade that I took today, and then also some of the mistakes I made because I took 5 trades today, 4 of them failed, and then the last one actually countered all of my failed trades. But the reason why those trades failed is because I was on the wrong side of the market, or the wrong side of the range at the time. All right, so looking at this, let's go ahead and get into it. The 4 hour is clearly bullish, but we are in an area where we're starting to slow down. Momentum is starting to slow down, it looks like. Our range was from this high here down to this low here, or if you wanted to look at it in this way, our range would be from this low to this high if you're following the bullish price action that's occurring, right? But because I'm day trading, I just wanted to notate the current range, not on the 4 hour time frame, but being aware of the reaction inside of this overall macro range. I wanted to be aware of what was going on at the time I was looking at the markets, where we had a reaction from inefficient pricing, I believe was in here, right? So there's inefficient pricing in there, and then if I wanted to go ahead and zoom in and see exactly what price reacted from, then I scroll all the way over here down to the 5 minute, and I can refine this area into here. But looking at it again, this doesn't look as clean to me. So I went down to the 1 minute to see exactly where price reacted from, and it actually just so happened to be at the time this here, this candle right there, right? So we have a sponsored candle that price reacted from, and that sparked the bearish price action for the day, as you can see clearly here, right? So now that I have my reaction in mind, and because I said I'm day trading, what I wanted to do was find out, okay, based off that reaction, where is our current daily target, right? Which just so happened to be this low here. But because of that price action, and because the fact that we failed to break this low here, this just added extra liquidity to these 3 points here, 1, 2, and now 3. We created a range based off that reaction from this high here down to that low. So what ended up happening, now that I have my play in mind, right, from that high down to that low, what I ended up doing was taking trades on the wrong side of the range here, expecting price to eventually, as you can see, go towards that liquidity and liquidate. Yeah, basically mitigating these orders down here. I actually was looking in the wrong side of the market at the time, or the wrong side of the range, and I was selling in discount. And it finally dawned upon me, I was like, wait a minute, I shouldn't be selling in discount. I didn't mark up the range properly when I came to look at the markets. But when I did, what I ended up seeing, which was clear as day, was an inefficient pricing here on the 15-minute time frame inside of the premium side of this range. And so what I ended up doing was refining to see, okay, where exactly is price looking to come to inside of that inefficient pricing? And I already know my target, right? So I already know my target is this liquidity down here. And so what I ended up doing was I went down to the 1 minute time frame, the 5 minute, and then down to the 1 minute, and I saw in the inefficiency about 50% of this 15-minute inefficiency that's marked with this green box here. I saw this green candle. That green candle is the sponsor candle that caused this move here. So what I ended up marking was the open of the candle, but I was also really skeptical of this candle, so I was like, I really want to get in this trade. So I actually entered off of the wick this time and had my stop loss at the high of the candle. So Ideally, though, I want to enter off the open or 50% of the candle, but because the wick was so much, and I'm only using the 1 minute time frame, I'm not using um, the obscure time frames like the 2 minute, 3 minute, whatever seconds. I'm just using the 1 minute. So just using logic, I applied this entry to the wick instead of the open this time. And thankfully, when I did that, I actually got tapped in perfectly, and price ran directly to target. And overall, this was, if we're going to mark up RR for this trade setup, this was a 4 pip stop, right? And I aimed for the target, I think it was 112 or 110 points. And I actually exited a little bit lower than that, but this was a 27 to 1 trade setup. It was beautiful. And then immediately after that, as you can see, price liquidated those orders and ran this range. And it hasn't reached it yet, but I'm pretty sure it's going to take out the original reaction from this 1 minute because now this range is balanced. So the other thing that happened, like I said I was going to go over it, was I was buying in the discount. And what I was actually seeing inside of this area were plays that, as you can see, they did give reactions, but they weren't foolproof because I was in the wrong side of the range. Um, I took a trade here at this high that gave a slight reaction. As you can see, this wick came down here. I took another trade here that failed. Took another trade here that failed. Took another trade here that failed. But we just passed the high. But because I wasn't at 50% of this inefficiency or the close, obviously this isn't going to be valid. And so I failed those few trades, and I think I failed a couple more in there. But ultimately, because they ended up failing, breaking even, whatever, I was like, you know what, let me use my brain. And I actually found that 1 minute sponsor candle, point of interest, whatever you want to call it. And I entered in off of it here, and that mitigated all my losses, all my break evens, running to a target, ending the day in high profit. So plan on finding some more trades tomorrow as the day is just opening up. Um, and then go from there, right? Just trying to run up this account. Peace.